Donald Trump is back in the Oval Office, and his policies are already shaking the foundations of the global economy. From new tariffs on trade partners to sweeping tax cuts, his agenda promises change, but is it for better or worse? The U.S. economy is facing soaring markets, but with it comes inflation and rising national debt. Meanwhile, global trade is under threat, as new tariffs could spark conflicts with key allies like Canada, Mexico, and China. Domestically, industries brace for labor shortages and higher costs, while international markets react with caution, navigating the uncertainty of America's new direction. How will Trump's presidency reshape the economy, your investments, and your day-to-day life? Stay tuned as we dive into the policies, the projections, and the real-world impacts. First up, Trump's proposed tariffs. He's vowed to impose a massive 25% tariff on imports from Canada and Mexico and a 10% tariff on goods from China. While the goal is to protect American jobs and industries, the ripple effects could disrupt global trade flows. Experts warn this could lead to retaliatory tariffs from affected nations, sparking a trade war. Industries like automotive, tech, and agriculture are expected to take a major hit, with global supply chains caught in the crossfire. And what about your wallet? Tariffs increase the cost of imported goods. That means higher prices for electronics, clothes, cars, and even groceries. Economists predict inflation could surge, putting more pressure on households worldwide. Financial markets are already bracing for impact. Stocks tied to international trade, like automakers and tech companies, are facing turbulence. While some sectors, like defense and domestic manufacturing, could benefit, the uncertainty has led to increased market volatility. Globally, the impact will vary by region. The Eurozone, already grappling with slow growth, could face further stagnation as U.S. tariffs disrupt trade. In Asia, China's role as a manufacturing hub may weaken, affecting the entire region's economic momentum. Countries reliant on exports to the U.S., like Mexico and Canada, may face significant economic setbacks, while emerging markets brace for spillover effects. But it's not just about trade. Trump's America First policy marks a shift in global diplomacy. Traditional allies are worried, and leaders around the world are preparing for a more combative U.S. stance in international relations. So, what's the bottom line? Trump's policies may boost some U.S. industries in the short term, but at the cost of higher inflation, increased national debt, and strained global relations. The world economy faces a delicate balancing act as nations react to these sweeping changes. Whether you're an investor, a business owner, or just someone keeping an eye on rising prices, the next 4 years will shape the global economy in ways we've never seen before. Stay informed, stay prepared, and let us know your thoughts in the comments below. Now let's talk about U.S. economy. Let's start with taxes. Trump plans to extend his 2017 Tax Cuts and Jobs Act, lowering rates for both individuals and corporations. He's also proposing to eliminate taxes on tips, overtime, and Social Security. While this might leave more money in your pocket, it comes with a catch: the national debt. Experts predict these changes could add $3.6 trillion to the debt over the next decade. That's a heavy price tag. Next up, tariffs. Trump is planning to impose a 25% tariff on goods from Canada and Mexico and a 10% tariff on imports from China. He says it's to protect American jobs and address border issues, but economists are sounding the alarm. These tariffs could make everyday items, like cars, electronics, and even food, more expensive. Plus, retaliatory tariffs from other countries could hurt U.S. businesses that rely on exports. And then there's inflation. With higher costs from tariffs and more money in the economy from tax cuts, inflation is expected to rise. Analysts predict it could hit 3.7% by 2025, up from earlier forecasts of 2.6%. To control inflation, the Federal Reserve might raise interest rates, which means borrowing money for homes, cars, or businesses could get more expensive. Another big concern? The federal budget. Trump's policies, including tax cuts and spending increases, are expected to add over $5 trillion to the national debt in the next decade. A rising debt could limit future spending on things like healthcare, education, and infrastructure. The labor market could also feel the heat. Trump's strict immigration policies might lead to labor shortages, especially in industries like agriculture and construction, which rely on immigrant workers. These shortages could drive up wages, but they might also increase costs for businesses and, ultimately, consumers. So, what's the big picture? On one hand, Trump's policies aim to boost the economy by cutting taxes and protecting American jobs. On the other hand, they could lead to inflation, a ballooning national debt, and economic uncertainty. The road ahead is full of opportunities and challenges. Trump's policies will shape the U.S. economy in ways that could impact every American. If you found this video helpful, don't forget to like, subscribe, and share. Let's keep the conversation going about how these policies could impact us all. First, the rally. The stock market surged after Trump's election victory. The Dow Jones shot up over 1,500 points, with the S&P 500 and Nasdaq also climbing. Investors are optimistic about Trump's pro-business agenda, including tax cuts and deregulation. But not all sectors are reacting the same way. Here's what's happening. Financials, banks are soaring. With promises of deregulation and corporate tax cuts, financial institutions are gearing up for a more business-friendly environment. Energy and utilities, energy companies are rallying, too. Trump's pro-fossil fuel policies have given a boost to oil and gas companies. Technology, but tech stocks? It's a mixed bag. While some benefit from tax cuts, others are worried about Trump's trade policies potentially disrupting global supply chains. However, it's not all smooth sailing. Investors are cautious, and here's why. Proposed tariffs, 25% on Canadian and Mexican imports and 10% on Chinese goods, could lead to inflation and higher consumer prices. The Federal Reserve might need to raise interest rates to combat inflation, which could make borrowing more expensive for businesses and consumers. The ripple effects are being felt worldwide. European automakers like Stellantis and Daimler have seen stock declines due to fears of new U.S. tariffs. Global supply chains, especially in Asia, face potential disruptions. So, what's the big picture for investors? Trump's policies may boost certain U.S. industries, but they come with risks of inflation, trade tensions, and market volatility. If you're investing, it's a time for both optimism and caution. The stock market is on a roller coaster, and Trump's presidency is just beginning. Will his policies deliver growth or spark turbulence? What do you think? This is AI Finance, bringing you the latest in market trends and economic insights. Thanks for watching, and we'll see you next time.